Hello and welcome to another episode of Stock Talk. This stock is one we all know very well at this point, ticker symbol GME, otherwise known as GameStop. And just what is going on with GameStop now? I'll give you a hint, it has something to do with cryptocurrencies. Could this be the saving grace this otherwise struggling company needs? Before we answer, click like and subscribe to my channel below to stay in the know. Aside from being popularized during the meme stock frenzy earlier this year, GameStop has actually been around since 1984. Based out of Texas, it is the largest international video game, consumer electronics, and gaming merchandise retail company. It wasn't until the last 5 years when the company really started to get in trouble. In 2016, the first signs of potential trouble emerged. Xbox, PlayStation, and Nintendo all began releasing downloadable games for their systems. GameStop faced an immediate market decline. In 2017, GameStop's first scandal hit the headlines. It was for questionable sales practices. Known as the Circle of Life scandal, it was an internal sales reward system that improperly incentivized the sale of more expensive used and old games over the purchase of less expensive new games. The idea behind the Circle of Life was that GameStop would attempt to be involved in every stage of games' life cycles, from new releases to used trade-ins. Unfortunately, the perverse incentives resulted in store associates lying to customers, often claiming new games were not in stock when they really were. The sales pressure also resulted in employees reporting poor working conditions and emotional distress. That same year, GameStop closed 150 stores after Xbox released its Game Pass and added back 100 stores geared at expanding its non-gaming business. It also attempted a $1.5 billion acquisition that ultimately failed, leaving GameStop $800 million in debt. In 2018, in an attempt to restabilize the business, GameStop began its search for private equity investors. By 2019, the sale had failed because of, as GameStop itself put it, lack of financing terms that would be attractive to an acquirer. This resulted in a 14-year low in GME's stock price. GameStop went on to report its biggest net loss in history at $673 million and suspension of its dividend. Plans were then announced to close anywhere from 180 to 200 of its most underperforming stores, along with consideration of other closures for having missed their second quarter estimates. 2020, a year for all of us to remember, faced GameStop with yet another controversy. GameStop attempted to stay open by claiming essential status on grounds that a few of their products supposedly enhanced remote work. Almost as if seeing through that thinly veiled excuse, the company still faced criticism for violating lockdown orders in major cities. Employees even came out with complaints of inadequate cleaning supplies. By January of 2021, various hedge funds had already been massively shorting GME, and understandably too, given the past 5 years to date. However, in come the Redditors. In retribution for the 07-08 financial crisis, the Reddit community known as r/Wall Street Bets organized a massive tour de force showcasing the so-called democratization of the stock market. What they pulled off is known in the industry as a short squeeze. They quite literally squeezed the hedge funds out of their short positions. By conspiring to buy up massive volumes of GME, the Redditors managed to artificially bid up the price of GME, forcing short sellers to rush back in and buy back the shares they previously sold with borrowed funds in order to cap their losses. This resulted in a feedback loop, ultimately bidding the price up even more to the detriment of the next short seller to the point of hitting a 52-week high of $483. Compare that to its 52-week low of $3.77. Now, I'm sure you've been wondering about my mention of cryptocurrency earlier in our episode. Well, now the time has come to delve into that further. And if you like what you've been learning so far, please be sure to click like and subscribe to my channel below. NFT is a non-fungible token. It's a unit of data stored on a digital ledger known as a blockchain. That blockchain certifies the token to be unique and not interchangeable. In other words, unlike physical cash, it cannot be counterfeited, as it even provides its owner with proof of ownership. So, what exactly is GameStop doing in the NFT space? Well, GameStop sees an opportunity with using NFTs in online games and has started building its own NFT. Called GME NFT, the token will be based on Ethereum's platform. This is encouraging because Ethereum is second only to Bitcoin by market cap. Like Bitcoin, it's a decentralized open source blockchain. The opportunities in Ethereum are virtually infinite. As it stands, Mark Cuban is investing in a platform known as Polygon, which is a scaling and infrastructure development system that will be based off of Ethereum. This shows us that GameStop is getting in at the ground level of this next stage in innovation. Who is able to say that GME NFT won't be able to compete with or even play off of relevant innovations that may come from Polygon? And clearly, this space is already attracting renowned investors like Mark Cuban. What's curious to know is that none of this has actually been formally announced. Take a look at GameStop's investor relations website, and no mention of NFT anywhere. So how do we know? The fact is that back in April, Ethereum community members stumbled upon the site nft.gamestop.com, and upon this discovery, it went viral on Twitter. nft.gamestop.com is already an Ethereum-based web address. Visit the site and you'll see that GameStop has also already created a standard token. Also on the site is an announcement that GameStop is looking to hire engineers, designers, and gamers. This coincides all too well with its April hiring of a blockchain crypto NFT experience security analyst. It's all coming together now, isn't it? Dig into the site further, like actually analyze the coding, and you'll uncover the contract for a token called GME. That token, as of May 26, is valued at $81.51 per token, and has already been used in 40 transactions. It seems as if the opportunity is unfolding right before us. Now, despite this colorful history, GameStop still operates almost 5,000 stores across the US, Canada, Australia, and Europe, and its stock, at still a relatively elevated price of $222, does not represent the current fundamentals of the company. GME as a stock has been very volatile. With a beta of negative 1.94, it's almost twice as volatile as the overall market and in the inverse direction. Its last 12 months' earnings per share are negative, coming in at negative $3.31 a share. This reflects the past 3 years of declining net sales from $8.29 billion in 2018 to $5.09 billion in 2020. And due to high sales, general, and administrative expenses on its balance sheet, along with a consistent year-to-year loss from continuing operations, its net profit has suffered substantially, despite improving. Having been at negative $673 million in 2018, profit for 2020 currently sits at a negative $215 million. They are in the red. Not to mention, GameStop remains highly indebted, with its total liabilities towering over shareholders' equity over 4 times, with its debt-to-equity ratio at 4.66. In its 10K, GameStop declared, "We may not be able to generate sufficient cash flow to meet our debt service obligations or refinance on favorable terms." They even floated the idea that they may need to incur more debt through their subsidiaries, which would be qualified for it. And, by the way, 11.11 million worth of GME shares remain shorted in the market. Now, what do you think about all that? Leave a comment below and share your thoughts. Click like and subscribe. Now, it's not all too negative for GameStop right now. GameStop has already seen departures from both its CEO and CFO. They're cleaning house. And as of April, GameStop has a new chairman by the name of Ryan Cohen. Ryan is a veteran executive from Chewy.com, the successful and popular pet food and supplies online retailer. In his short tenure at GameStop, he is already bringing in top talent from Amazon to fill in the roles of COO, CTO, and a position dubbed Chief Growth Officer. His firm, RC Ventures, has taken a 13% stake in GME and has brought forth with it the goal to transform the company into a major e-commerce player. Since then, global e-commerce sales in the fourth quarter of 2020 are up 175%, representing 34% of net sales. For the full year of 2020, they are actually up 191%, or 30% of net sales. Now, while this does not eliminate the problems with its balance sheet that we described earlier, it does start to set a new course for GameStop moving forward. Some commentators are even starting to get bullish. Perhaps it's not so much by its fundamentals or its latest improvements, as it's too soon to tell, but because shorting GME any further is just asking for trouble with the Wall Street Bets community. As a matter of fact, an article released recently on the 26th suggests that GME may be back in meme mode with another potential short squeeze imminent. Where we go from here is anybody's guess. We are still in the early stages. That being said, we cannot deny the obvious shift in direction GameStop is taking to perhaps even reinvent itself through crypto. However, we should not forget that GameStop's colorful history has left its balance sheet weak and its stock volatile and subject to sudden meme stock craze. We will continue to monitor this company for you, its stock, and its bold moves as it continues to shake up management and its operations. Thank you guys for tuning in. I hope you found today's special report informative and insightful. If you liked what you just watched, don't forget to click like below and subscribe for more.